All right, good morning, everybody. Welcome to Game Edge Pre-Market Prep on Thursday, July 24th, 2025. I think we've rectified our audio problems from yesterday, so if anybody wants to type in the chat and let me know for sure, but everything should be good to go this morning. Anyway, welcome, everybody. Again, we'll go through our three pillars here at Game Edge, sentiment, structure, and trend. We'll review our market trend model. We'll also go through our 0DT structure for today, as well as our SPX game plan as we head into the trading day this morning. So starting with, as always, our market trend model that keeps us on the right side of the market. This is based on the tick index, and you can research at your favorite investing website. But the quick takeaway is buying versus selling in the overall market. We reference this bolded white line here. Great, thanks. The cumulative tick, this is an intraday instantaneous cumulative tick. If it is above these shorter term moving averages, we use these for momentum. We look for the overall market to appreciate to the upside, and we like to look at the overall slopes. If those are in positive slopes, obviously from lower left to upper right, there's more buying versus selling in the overall market. And again, that keeps us on the right side of the market. Reference our breadth indicator up here, new highs versus new lows. Significant outperformance yesterday on new highs, as you would expect. More stocks being accumulated and bought versus being sold really for the past couple weeks. Our filtered cumulative tick, this is plus 1,000, minus 1,000, larger block orders, obviously above zero and moving to the upside. So institutions obviously accumulating and buying yesterday. And then just our overall cumulative tick reaching that 128,000, which is a bullish look of overall buying. And then referencing our colored ribbon, which is our longer look back period of 2-3 weeks or 30 plus days, just indicating where market participants are positioned or participating in the overall market. The red above cyan with positive slope to the upside, again indicating a longer term uptrend within the overall tick index. So again, accumulation and buying continues to be alive and well. So we'll continue to watch the overall market trend model. If we did see some stalling within overall price, as well as our market trend model, and it starts to turn back down while SPX is making new highs, again, that would be a divergence and indicating that less buying or accumulation is going on as SPX continues to move higher. So again, we'd watch that divergence and then look for an overall pullback within the overall market. But again, we continue to see a bullish trend to the upside, market trend model confirming that more stocks are being bought, as indicating also by SPX price appreciation. Moving on to the SPXA, obviously this is our cruise ship. If you've been following us for any extended a period of time, these are contracts that don't turn over as rapidly as the SPXP. We separate the SPX into the SPXA and SPXP so we can get an overall indication of positioning of larger market participants and longer dated contracts. Call dominated above and below spot price. We've talked about these possible erosion below us. That seems to have repaired itself pretty rapidly yesterday again. So just a few pockets of out of the money put speculation to the downside, but again, nothing to speak of. 6340 is that DEX transition, and we have the GEX transition up here at 6410. So again, staying above this is any pullback is an opportunity to get involved long in the overall market. Even if we pulled back through transition, you see 6,300 down here in the money calls. Again, all of these will be supportive as we pull back, unless we see, again, a significant erosion in the overall structure and sentiment. But above 6,340, we are more bullish for a structure move up towards 6,400. You'll notice the expiries over here. August continues to grow and be obviously the next important, largest expiry. So we'll continue to watch the positioning heading into that expiry in August. Moving on, the SPXP, again, shorter dated contracts. These turn over much more rapidly. Again, we reference the SPX options complex because it's the largest and most liquid that we can look at to get an overall understanding of where market participants are positioning. Call dominated above and below spot price. You'll notice, again, just green net delta all the way through this overall complex and structure. The transition here located at 62.95 up to 63.20. So again, any pullback into these areas are an opportunity to get long the overall market. As long as the market trend model, as well as the sentiment structure, still maintaining their overall bullish look, which they continue to be. You'll notice today we have 23% GEX expiration today, and then Friday obviously is the next expiration with the largest amount. So we'll just continue to watch this throughout the day. We'll move on to the GEX ratio of the SPXP. We talked about this yesterday, having a negative slope. We wanted to see it repair itself rapidly if we saw SPX price appreciation. The main takeaway here is this is a kind of put call ratio chart, but we add a time component, which is gamma. And really what we look for is divergence on these charts. The divergence would be that the SPX is making new highs while the GEX ratio is not in a positive slope or not moving up. So that would indicate the call speculation is drying up as SPX continues to move to the upside. We were seeing that through this consolidation and this overall kind of move that was moving to all-time highs. We saw this continue to drop, and we said this was a divergence that we would need to keep an eye on, just a feather in our cap, not necessarily anything to act on, because we were above that one level, which indicates that call speculators and bulls are still in control. But we wanted to see this repair itself. Obviously, this is spot price sensitive, so as SPX moves up, we do capture more of those out of the money calls. Those become in the money, so again, increasing this overall ratio to the upside. But again, what we would look for is a divergence. As price moves up, the GEX ratio would be dropping, indicating that the out of the money call speculation is starting to drop. And that would be an indication to be slightly more cautious as the price moves up. But as of now, it repaired itself. Everything looks good to the upside for a bullish move. And again, we'll continue to watch this day over day. Moving on to the SPXP Delta Balance, we talked about the weakness possible next week into overall Wednesday. We were looking at a drop in that right-hand plane to the downside. You can review yesterday's pre-market prep and analysis. We were seeing this green dotted line that was moving to the downside below the zero side, indicating that out of the money call speculation was dropping, and we might be prepared to see some overall stalling or weakness into next week. But again, that has quickly repaired itself back to the upside, again above the zero line. You do see the in the money dropping slightly, but you just see a crossing here, so indicating that the in the money calls to the downside are just dropping slightly, but then the out of the money call speculation is increasing and overriding that drop in the money calls. So it maintains our delta balance at 1, which is indicating that call speculators and bulls are in control of the overall structure, as well as sentiment. And then again, same thing here. We see the in the money calls, obviously positive slope to the upside. Out of the money calls here dropping slightly, but again, nothing really to speak of, and delta balance maintaining 1. So really nothing to take away. Just move on. Bullish structure. Everything looks very very good for either price maintaining on pullbacks or possible moves to the upside. Moving on to SPXP 0DT, this is what we're getting into our game plan for today. Again, call dominated above and below spot price, net GEX at 29,000. In the extreme, not extreme, but in the bullish camp of a positive gamma here. Expected move 0.5%, so really not an increase in volatility, only 32 points. So again, just within the overall expected move within the range, 0.5% would be up towards 6,400. That would be that first target to the upside that would be watching if we're staying above the top of what we call our drunken sailor range. Drunken sailor range is just a low exposure area, as you can see by the net OI. As we go through this overall kind of shaped curve, you see the net OI dropping. So again, within this overall area, as we discussed yesterday, you're at the mercy of the intraday volumetrics, which we have a tool to monitor that, which is vol-m command. And that is just market participants opening and closing contracts intraday, pushing us one way or the other, depending on what their overall thesis is for the day. You'll notice that GEX and DEX transition at the top are confluence. So again, any pullback within the overall drunken sailor range, top of the drunken sailor range, as well as this transition level, which would be 6,350, would be an opportunity for a bounce to the upside and get involved. If we drop through the drunken sailor range and through this overall transition, we'd be looking for a little bit more weakness, possibly down towards the 6,300. Again, not really expecting that unless we see a significant change in sentiment, structure, as well as trend. We'd have to drop through both of these transition levels, which usually these are supportive in a call-dominated environment. So again, opportunity to get long. If we start seeing the rejection at the 6,400 level, then we would look for an opportunity to short for a move back down towards the drunken sailor range. Again, going to be a significant amount of OI to get over, as you see 58.74 here. and then really not expecting us to move up to this 64.20.25. But if we do, just a large confluence and a mass of out of the money calls that will become in the money that matches our COTMC level, which is a proprietary level here at GameEdge, where those out of the money calls go in the money. And historically, we've seen an opportunity or a monetization of those out of the money calls when they become in the money. Those holders want to get paid for their risk for the day. And then we see up there 64.75, that's COI, that is extreme and out of reach today. So those obviously call holders will be disappointed, but hopefully we see some sort of move from top of DS towards 6,400. That would be an opportunistic trade there. Then if we have a failure at 6,400, a failure to get over, obviously that large net OI, then that'd be an opportunity to short back down towards the top of DS. If we pull all the way down towards the bottom of DS, again, this would be an area for us to get long. We like the bottom of transition areas and pullbacks within a call-dominated environment for an opportunity to get long the overall structure. So we'll see how this plays out today. As of now, pre-market, it looks like we're going to open at least at the top of the Drunken Sailor range, or maybe if we get a little bit more weakness at the top of this confluence of transition. So again, extremely important area heading into today. SPXP net stat command, high sensitivity levels. We talked about this yesterday. Go back and review our player. 6,300 was a high sensitivity level. We can argue whether the news comes out at those high sensitivity levels, but yesterday we were just testing that 6,300 3 times to the upside, and then we got the news that came out right at that high sensitivity level, which offered a great opportunity to the upside, and many of our members took advantage of that and had nice trades to the upside. So again, these are our sensitivity levels to be watching for today. Again, 62.75. If we moved all the way down there, we're most likely looking for that to be supportive. So again, 63.85 to the upside. That's again close to that 6,400 level, but we watch to see if we capture these out of the money calls and drive up towards those that would become in the money, capturing that positive delta and drive us up towards the 6,400, and then that's going to be probably difficult to overcome. We talked about the 64.25 to the upside would be really a very difficult level. So now you have out of the money calls with this charm continuing to grow overhead, causing an overall weight and then a significant amount of net OI that you need to plow through again. So your intraday volume metrics would have to be very large for us to plow through these overhead levels. So again, these may be an opportunity on multiple tests and then failures for an opportunity to short back to the downside. So we'll continue to watch, again, these sensitivity levels. Net charm, net van at 6,300. So we've already discussed that on any pullback. Those most likely would be in opportunity areas. So we'll watch those intraday as we move through it. So let's go ahead and look at pre-market here. So 63.61. So again, we'll be right at the top of that Drunken Sailor range, right at the top of the overall transition. As we open, you see really we came down pre-market and tested the top of those ranges, top of that Drunken Sailor range multiple times. So basically what I would do is obviously that Drunken Sailor range we've already outlined. So I just put a nice little box there. And that would give us an opportunity. If we stay above that, we would be bullish for a move up towards the top of this range, towards pre-market high, 63.70. And then be looking for a move up towards 6,400, depending on what the vol M and intraday volume metrics are telling us. So that's our intraday plan for today. Go back and look at the 0DT chart. You can pause your player and look at that. I see somebody's asking about GLD. We'll go ahead and look at that and pull that over. So pulling this up in our web app this morning. So GLD, obviously all expiries turned on here, call dominated above and below spot price. We see COI and PGEX at 315. So that would be an important area to the upside. Right now, GLD is within the overall transition area. You see COTMP just below us. So again, historically, that's an area where we see out of the money puts go in the money. But again, this would be supportive on any pullback with this call dominated plus positive net delta all the way down towards really the bottom of the transition area. You see POI down here at 300. So that's kind of interesting. If you lost the bottom of the transition area, then obviously 300 would be most likely the next area to look for. I'll just go ahead and pull the rest of July here. So that's the rest of July. So we're put dominated through the end of July. So again, you see PGEX up here in COI at 315. So most likely I would not see us traversing up there. You see these in the money puts overhead. These are going to become an overall headwind for GLD to move up, and then COTMC there at 313. So not really anticipating GLD to move up, and now you see we're under NGEX at 310. So again, that will be an overhead weight too. So again, moving up, positive expectancy on GLD. Probably not into the end of July unless we have some sort of change in that overall sentiment and structure. I can look at Google here. So this will just be overnight updates. I don't know what Google, I think they had earnings yesterday. So this would be just the overnight net OI update, not necessarily anything that's happening pre-market. So call dominated above and below spot price. You see COI and peak X at 200. I can look at Google pre-market here. Let's see what it's doing. So extended hours, so 197.20, okay. So right under that 200 level. So that 200 level overhead most likely would be a cap on price for now, unless we see that structure move up. You want to see that. So that's the nice thing about our web app is we can go to this next expiry, which is obviously a weekly expiry on Google. We see 200 there, then we can move on out to the next, to the first. We see COI move up to 210. PGX stays at 200, so you'd want to click through these expiries, obviously weekly expiries, and you want to see if the overall structure continues to advance. We have a couple other tools within our Discord that will allow you to do that also, and we can look to see if out of the money call speculators are continuing to move up in the overall complex and structure, indicating that Google could price appreciate. But if we get through 200, then obviously 210. Call dominated above and below spot price, and you're above transition. So this is all a bullish look for Google and possibility of move to the upside. I also like to look at the expected move depending on which expiry you're looking at. So 10.62%, 21 points. So that's quite a bit higher than what the overall COI is at the moment. So if we do get through 200, then obviously 210 would be that next area I'd be looking at. If you get through 200, you're going to capture this large amount of out of the money calls. Those would become in the money. That would be a positive delta. So obviously that would need to be hedged as we capture that and then start moving to the upside. And if the call speculators keep maintaining the overall structure and move, then PGX most likely would move up to 210 and COI would continue to be maintained at 210. We have an overall mechanical portfolio that actually trades the transition level to the PGX level, and PGX is where we take profit at. So again, that's going to be a very important area to capture and then stay above and then see if that structure continues to move up. But you can check out our mechanical portfolio. It's called P-Trans to PGX. We posted a significant amount of education on that. And our comparison to the SPY or SPX buy and hold, it outperforms that pretty significantly. So, all right, everybody, thanks for joining us this morning. Thanks for the interaction, going over those single stocks. Again, join us on X as well as YouTube. Like and subscribe, get notified anytime we go live, as well as posting our intraday content. So, all right, thanks, everybody. Make it a great day.